So let's talk about one single day, Friday, October 3rd. Now, on the surface, it might seem like just another Friday. But when you really dig in, you start to see a country living this totally bizarre split-screen reality. On one side, you've got complete and utter political gridlock. And on the other, well, the stock market is just soaring to these incredible new heights. So what on earth is going on?
And this right here is the whole paradox in one image. You've got the US government on day 3 of a full shutdown. Things just aren't working. But at the exact same time, the S&P 500 is hitting a brand new all-time high. It's really a tale of two completely different Americas playing out on the very same day. So let's break down what this actually means.
Okay, first up, let's get into this shutdown, because this wasn't just some political headline you scrolled past. No, this had serious, real-world consequences. It created this huge ripple effect that was touching millions of people's lives in very, very direct ways.
I mean, just look at the personal impact. Check out this number, over 1 million. That's how many student loan borrowers were just stuck in limbo. Because of the shutdown, federal staff couldn't process their applications, so they couldn't get into repayment plans, all while that interest just kept piling up on their debt. Absolutely brutal.
And it just kept going. It was like a domino effect. The shutdown actually blocked the release of the September jobs report, which is a huge deal. It left economists and even the Federal Reserve kind of flying blind. Then you have billions in federal funding for huge projects in New York and Chicago just frozen. And that nearly $8 billion for energy projects across 16 states, gone, canceled. The paralysis in D.C. was causing paralysis everywhere else.
Okay, so now let's completely shift gears, because while the government was grinding to a halt, the tech world was slamming its foot on the accelerator. And the whole frenzy was centered around one thing, AI.
And the epicenter of this whole thing was OpenAI's brand new AI video app, Sora. The hype was just off the charts. I mean, everybody was scrambling to get their hands on this thing that could create these stunningly realistic videos from just a few words of text.
And get this, even though it was invite-only, Sora immediately shot up to the #1 spot on the entire Apple App Store. It leapfrogged giants like ChatGPT and Google Gemini. The public's appetite for this new tech was just absolutely insatiable. But, right in the middle of all this hype, we get a major reality check from the very top of the financial world. The CEO of Goldman Sachs, David Solomon, comes out and basically says, hey, this AI-fueled market run feels a lot like other tech bubbles we've seen. He even predicted a drawdown, a market correction, was on the horizon and that it was going to bring some pain for investors.
Then, Jeff Bezos jumps into the whole debate, and he's got this really interesting take. He agrees, yeah, it's an industrial bubble. There's a ton of money being thrown around at good and bad ideas. But, and this is the really important part, he argues that unlike past bubbles, the technology at the center of this one, AI, is totally 100% real, and it's going to fundamentally change every single industry out there. So on one hand, we've got a government that's stalled out. On the other, a potential tech bubble that's just exploding. But what does all of this mean for the average person's wallet? How did this story of two extremes actually play out in the real economy?
Well, for those at the very, very top, this stock market rally was creating wealth on a scale that is just hard to wrap your head around. New data showed that the total wealth held by just the top 1% of Americans had swelled to a record-breaking $52 trillion. Just wow. And to put that into perspective for you, the top 10% of Americans now hold a staggering 67%. That's more than 2/3 of all the nation's household wealth. The gains from this whole market boom were overwhelmingly flowing to a tiny, tiny fraction of the population. But for people just starting their careers, the reality could not have been more different. A really tough report from the Burning Glass Institute found that recent college grads were facing the most difficult job market in modern history. The bottom line was that a bachelor's degree just isn't the golden ticket to a good career that it used to be.
And you could see this economic strain showing up in other places too. I mean, take Spirit Airlines, an airline literally built for people trying to save money. They filed for bankruptcy, saying that passenger demand was just too low and the financial pressure was too high. They even announced plans to cut their fleet almost in half.
So what happens when people are feeling that pressure? They start hunting for value anywhere they can find it. And a perfect example of this is what happened in the used electric vehicle market. It just exploded in popularity because brand new EVs were just way too expensive for most people.
Yeah, the numbers here really tell the whole story. The average prices for popular used EVs dropped like a rock. You could get a Nissan Leaf for under 13 grand, a Chevy Bolt for under 15,000. For the average buyer, that dream of owning an EV was finally becoming a reality, but only if you were willing to buy used.
So where does that leave us? What are we supposed to make of this one single deeply contradictory day? What does it tell us about where things are headed?
At the end of the day, we're left with this really fundamental question. On one side, you have a government at a complete standstill and a brutal job market for the next generation. On the other, you've got record-breaking wealth for a select few and a tech revolution that's charging ahead at full speed. It's a snapshot of two Americas, just coexisting in this really fragile balance. And the real question isn't just whether this can last, but for how much longer these two Americas can keep on living in two completely different worlds.